Good morning, everybody. Welcome to our Paymentshield HiiT session on this bit cloudy actually for us Wednesday morning. So I can see you all joining through. So we'll just give you a couple of moments so everybody can enter the session. Brilliant. So I can see those numbers going up now. So first of all, yes, thank you for joining. I'm delighted to have Jeni with us today from Paymentshield. So we've been working closely with Jeni this year. She's our national account manager and thinking about how we can make your lives a bit easier with the GI conversation. So Jeni's put together some a presentation today to talk you through one about improving knowledge and helping you when you're speaking to clients, also help you understand a bit more about the underwriting side of things to help with those conversations with clients as well. But this is an open forum, it's your time, we want to support as much as we can. So if you've got any questions, please pop them into the chat, and as Jeni's going through the presentation at the end, we can review the queries and either answer them on this session, or if we need to do a follow-up call, we're more than happy to do so. So in true style, I'm going to be the slide clicker. So Jeni is going to do the presentation. So over to you, Jeni, and thank you again for joining us today.
My absolute pleasure, Louise, to be with you today. So for those of you that haven't met me over the years that I've been around, my name is Jeni Law, as Louise said. I've been with Paymentshield now for over 13 years, relatively fresh into the national account role, but I do have quite a bit of background in the DA space as well, so you may find that we've crossed paths at some point in the past. So as Louise said, today's session is going to be a little bit different. It's not going to be all about the product. It's going to be about supporting you to improve the conversations that you're having and hopefully to get some better customer outcomes as well, because that's a priority at this point in time. So very quick hello from me, and then on to a couple of learning outcomes in true trainer style. The first section of today's session is going to be around the underwriting process. So this is going to hopefully grow your knowledge so that you can support your customers a little bit better. We want to make sure that we're increasing your understanding of the underwriting process, showing you that it's not all just a one-size-fits-all as far as pricing goes. We're going to review how insurers establish a customer's risk, and we're going to highlight some of the areas that insurers consider outside of the quote journey, so factors that you and your customer might not be thinking about, and hopefully this will all help you to have the conversation about the difference between the cheapest price and value for money as well. So if you can click on for me, please, Louise. So if we think about what makes an insurance premium, so whenever I'm talking about insurance premiums, I always get people to think about a picture or a piece of art. Everybody's definition of art is different, and what people look for and what people want is different. So we need to think about what the subject is, what the background is, maybe the frame that the art sits in and the style of the painting. Now, these things might be things that we don't automatically consider when we're thinking about what makes a piece of art useful to us, but actually these can have a really big impact on the bigger picture, and everybody has different tastes when it comes to art. And it's quite similar when the insurers are looking at the price that they would put on the customer's risk. And this is really important for you to understand, that not every insurer is looking for the same thing. So we can click on. So it's not as simple as just picking the best picture. So insurers are running businesses, so they need to consider things like loss ratios when they're inviting customers to insure with them. A loss ratio is the premium that's received versus how much the anticipated cost of claims are. Simple, right? Well, they also need to factor in 100% of the cost to run the business and the cost to underwrite the wider book of business as well. So this isn't just about looking at the individual customer, it's all about making sure that we get balance to decide what that loss ratio is. So if we can click on, so if we look at this in a little bit deeper, a core principle of insurance is the idea of a common pool of risk. So if we think about a giant ball pool, where each ball has a monetary value towards an insurance claim that's associated with it. If we were to put all the Paymentshield customers into this ball pool, this will create your common pool of risk. where every customer has equal access to the funds in the pot. But not every customer's risk is equal. So the customers who are perceived to be more likely to need to take some of the balls out of the pool or to make a claim would need to pay a little bit more to enter the ball pool. And those customers who are less likely to take a ball would need to pay less to be part of the common pool of risk. So we can click on. So if we think about it, you've got customer one who's more likely to make a claim and more likely to take balls from the pool. They need to pay that extra premium to be entering into that pool. Customer two, where there's going to be less likelihood of them needing to take a ball out, pays a little bit less to be part of it. Now, I know that's a really silly picture and a silly image, but for me, it made sense, so we'll go with it. So if we then look at the underwriting process on the next slide. So how do the insurers establish who is more at risk of taking from that common pool? Well, this is where your underwriting comes in. And the underwriting process is about more than just the information that's gathered on your quote and application process, but this is a really good place for us to start. So we've then got actuarial risk, which is your pricing risk. So this is the possibility that a damaging event may occur and at the rate out of proportion with the probability of it occurring. So essentially trying to balance that risk. Then you've got your risk assessment. Your risk assessment is the process in which the insurance companies evaluate the risk to cover any individual. We'll have a look at this in a little bit more detail. So your presentation does cover both, but we're going to focus first on the underwriting side of things. Before we go any further, I want to flag a piece of legislation that came into force a few years ago. It's called CIDRA, so the Consumer Insurance Disclosure and Representations Act of 2012. Now, this act was brought in to protect consumers, and it shifted some of the responsibility around disclosure onto the insurers by putting more emphasis on the questions that are asked rather than the information that is given. Now, obviously, customers must take reasonable care to disclose key information about their risk, but if insurers are seen to be not asking relevant questions, then the customer can't be blamed for not disclosing something important. So, for example, the customer's house flooded 5 years ago, but the insurers doesn't ask a relevant question. So, for example, with Paymentshield, we ask, has the property or land belonging to it flooded in the last 10 years? If the insurer is not asking this question, then how can the customer be penalised for non-disclosure at a later date, as the insurer gave them no opportunity to disclose that during the application process? Now, quite often we'll get phone calls from advisors asking about customers got a mining report, for example, and they've been told they have to notify the insurer. We don't ask the question, so we don't need to know about that. We're fine with it. Similarly, if the customer is in a high flood risk area, but the property hasn't flooded, then again, we wouldn't need to make any notes of that. We'd take all of that into account just on the postcode checkers. So if we can click on to the next slide, I think there's a couple of clicks on this one. So with any protection policy you sell, you will be asked questions about the customer either as part of your fact find or part of your application process. You may find that different insurers ask different questions. And if we think back to the start of the presentation, this is all about establishing a clear picture about the customer that is relevant to the insurer. It's all about painting that picture. So, for example, here at Paymentshield, we may ask you a couple of extra questions about the number of occupants in a property, because we believe that this can have an impact on the risk of accidental damage. Those of you that have got young children will know exactly what I mean when I say that. Our quote journey also captures information about the number of bathrooms in a property, as the higher the number of bathrooms, the greater the potential risk of escape of water could be. Conversely, though, we don't ask any questions about how much of the roof is flat, or how close the property is to a water source or tall tree, as these aren't factors that will impact a premium with us. You may find that different insurers are asking those different questions, and it's all about them painting that picture. So insurers can make assumptions about certain risks to help them reduce the amount of information that you need to put in. For example, rather than asking about the number of children in a property, some insurers may choose to assume that all households have 2 children. Others may choose to assume that every household has a family bathroom, an ensuite bathroom, and a downstairs loo. This could load the premium to balance out the unknown element of the risk, meaning that someone who has 1 bathroom could pay more than they need to simply because the question hasn't been asked. Some insurance products also use bandings to make similar assumptions. A great example of this is your car insurance. So different cars have different bandings where assumptions are made purely on the type of car you drive that impacts on your premium. The assumptions are quite a dangerous place to be because it can mean that customers pay more than they should for insurance. So we can click on, please, Louise. Additional information can be drawn out during the quote journey that can fall into categories of physical and moral hazards as well. These can be things like criminal convictions, points on a driving licence, previous claims volumes, or even pre-existing medical conditions. Gathering this information continues to help the insurer to get a better understanding of the customer and the overall risk that they present. So the more information the insurers can gather, the clearer that picture becomes for the insurer. So if we can click on. So for home insurance in particular, there's a couple of clicks on this slide, sorry, Louise. Previous claims history is a really important part of the risk profiling process. If a customer's claims history isn't 100% satisfactory to the potential insurer, the insurer may choose to bring in things like endorsements or exclusions to the core proposition to limit the risk. Alternatively, the insurer may choose not to offer insurance terms at all. Claims frequency and severity are also taken into account. So, for example, a customer who's made a high number of low severity claims could be seen as a higher risk of making future claims based on a behavioural point of view. Customer behaviour can lead to no quotes being returned or significantly higher premiums. Now, a really good example of this is a customer who, and this might sound very flippant, but bear with me, a customer who maybe every time iPhone release a new phone claims for accidental damage to their mobile phone. It might fall out of pocket, it might fall down the toilet, but if they're claiming on a regular basis for those sorts of things, multiple small severity claims can actually add up to a massive impact on the risk profile that a customer presents. Equally, if a customer has recently made one very large claim, this can have a similar impact too. Not from a customer behavioural point of view, but from an environmental perspective. A large claim for a flood, for example, can increase the perceived risk for the property at this time. So before returning a quote, the insurers must decide if they're going to accept the risk. Under what terms? So will they be implying an endorsement or exclusion? And at what price? Endorsements and exclusions can be used in other areas to reduce a risk level. And this means that insurers are able to offer insurance terms to more customers who might have a slightly elevated risk level. So these are really good things. But we also need to make sure that we as the advisor and actually our customers are aware that endorsements and exclusions can be used in this way, and to make sure that they're checking if they're going down a non-advised process. If we can click on, please, Louise. We're then onto the law of large numbers. Now, this applies to information that the customer provides about their own claims experience during your application. But what about the wider risk that's associated with the property that might be unknown to the customer? And this is where your law of large numbers comes in. If you were to take a coin right now and flip it 10 times, how many times do you think you're going to get heads? Now, your automatic assumption might be that you'd get heads 50% of the time. But when we're dealing with such a large number of attempts, the truth is that it could be 10 times, it could be 0. It's not until you repeat this experiment 10,000 times that you're more likely to see the 50-50 split between heads and tails. And this is a very, very simple way to explain the law of large numbers. What's this got to do with insurance? Well, when it comes to insurance claim, insurers look across the large book of business. And when they're looking across a large book of business, the likelihood of claims becomes a little bit more predictable than when you're looking across a smaller book of business. You can see this in action when you see the differences in premiums for certain postcodes and certain property types. As you quote more, you might be able to spot trends in your local area, but this isn't always something that will become obvious to you or your customer as you move through the application process, purely because of the size of the pot that you're dealing with, the number of coin flips you're doing. And we click on, please, Louise. In addition to the law of large numbers, insurers will also look at the aggregation of risk and catastrophe modelling when considering their appetite to take on the additional risk. If we consider, for example, a new build housing estate, quotes on the estate can change over time, even without claims being made. For example, if you are the advisor of choice for a developer, you might get the opportunity to support all 10 properties on the development. You begin to quote as the properties start to sell, and the first 3 might be smooth sailing with one insurer. But when you start quoting for properties 4 and upwards, you might start to notice that the insurer begins to increase their pricing, or maybe even chooses not to insure. And this is down to the risk exposure controls. If one insurer insures all 10 properties, this has a much bigger risk exposure. If the whole estate was to flood, for example, that insurer has a much larger payout than if the risk was evenly split over 4 or 5 different insurers. Now, this doesn't just impact at a housing estate level, but that's a really easy way to kind of look at it. It can also impact an insurer's appetite to insure in a postcode across the board, especially if they've already got a larger book of business in that area. You may have seen this in the past where a specific insurer suddenly becomes less competitive in an area where you've previously recommended them. It could simply be the fact that the insurer feels that their risk exposure in that postcode area is becoming unbalanced, so their appetite to take on new and additional risk will become reduced. So if we click onto the next slide, please. So as you can see, underwriting risk associated with general insurance isn't an easy job. But it is important that you understand a little bit more about the process so you can support your customer through the journey. If you think back to the very beginning of the session where we were talking about that painting of the picture, if we keep in mind that the insurer may also be considering factors to give your picture a more detailed background or a specific frame to sit in. If you support your customer to answer the relevant questions honestly and to the best of their ability, you'll put them in the strongest position to get the right product at the correct price for their individual risk. And this is where the conversation becomes more about value for money than cheapest price. We are in a cost of living crisis, so price will always be a factor. But actually, if we focus on the value for money, we actually help the customer to understand the product that they're buying and making sure it's fit for purpose for the price that they're paying. So we can click on again, please, just to recap on the learning outcomes, because that was a very specific topic. So hopefully that's helped you to grow your knowledge to support your customers. It's increased your understanding of the underwriting process. It's also going to help you to have a few more conversations about how the insurers can view the risk profile for the customer. And quite importantly, when you are looking at a customer who's maybe self-serving on a comparison website, make sure they're aware of things like endorsements and exclusions, because these can bring the price down, but actually lower the flexibility at point of claim. So it's really important that they know about that. So if we move on to the next slide then. So why is it important that we do advise on GI? Well, GI is compulsory purchase when it comes to taking out a mortgage. So it's really, really important the customer understands what they're getting. So it can be purchased as buildings on a buildings only basis or combined as buildings and contents. You can do it as a contents only option as well, where that's relevant for the customer. As with most policies, there are a number of risks and events which are covered. Now, I'm sure most of you could name the most prevalent things like fire, flood and theft, as well as storm damage, subsidence, etc. Malicious damage is also covered along with vandalism. And it's really, really important that we actually help the customer to understand it isn't just about those big events. Escape of water and oil are really, really big claims when they happen. And that's something that we actually saw a spike in at the end of the year last year, with people starting putting their central heating on when things got very cold. Buildings insurance also protects your home and garden from damage that's caused by attending emergency services like fire brigades, etc. And we also cover for accidental breakage of glass, so your windows and your sanitary ware's included as standard with us. So we can click on, please, Louise. I know we should always focus these sessions on what's in it for the customer, but actually GI is a really big opportunity for you guys as well. As it stands, general insurance penetration across the mortgage market is under 20%. So we've got a compulsory product that is linked to a mortgage, but 80%, and we've got 80% of the market to go at. So only 20% of the mortgages that are being written by advisors have a general insurance policy attached to them. This is a really, really big opportunity for you. But actually, it's a great service that you can offer for your clients, existing as well as new customers coming to you. So don't be put off by talking to a remortgage customer about reviewing what they have in place, because that's a really, really key thing at the moment. Customers want to know that the money that they're spending is going on the right things. So a review of anything at this point in time is a really good opportunity for you. So if we can click on, you do a great job. So why not take the opportunity to ring fence your client to help avoid them going onto comparison sites? Now, this might sound like a really strange thing for me to be saying, but a customer that goes onto a comparison site, you may find that their data is sold on to other protection advisors to look at the things like life and critical illness. This is a great service that the comparison sites offer to make sure customers get advice in the right places. But if they're your customers, you don't really want somebody else talking to them. So by having the conversation yourself about home insurance, it limits the opportunity the customers have to go and start self-serving and potentially get contacted by somebody else. Can we click off? Another really good thing that's quite often overlooked, but it's really, really important for longevity of your business, is having a reason to have regular contact with your customer. Typically, customers are going on to 5-year fixed deals at the moment. Some may be going on to 2, but across the marketplace, we're seeing 5-year fixed as quite a common one. Having an opportunity to talk to your customer at some point during the next 5 years is really, really important, because it can help you to maintain your relationship with your customer, to make sure that when their 5-year deal comes up, they're coming straight back to you. Home insurance renews on an annual basis. Paymentshield will give you the renewal information when we send it to the customer as well, giving you a genuine reason to pick up the phone to the customer once a year to check in, make sure everything's okay. Your home insurance renewal is coming up. This is what your new price is. Has anything changed? Oh, there's a new baby on the way. Congratulations. Right, let's look at your life insurance and make sure that's still fit for purpose. And having that touch point throughout that 5-year journey for the customer's mortgage is a really, really valuable asset for your business. So if we can click on 2 slides, there's not much on this next one. Thanks, Louise. So let's just have a look at kind of why your advice is important. So the stat on the screen here, sometimes people kind of go, why on earth are you telling us that in a presentation? This is not a Paymentshield stat. This is a UK insurance market stat. 23% of claims are rejected every year in the UK by home insurance companies. So this is quite often why customers don't see the value in home insurance, because everybody will always know somebody that had a claim rejected. Insurance companies don't just reject claims because they feel like it. They reject claims because customers are claiming for things they're not covered for. Now, some of the most common reasons for claims being rejected is customers not having enough cover in place. Now, I don't know if any of you have been onto a comparison site recently, but actually some of the comparison sites automatically make assumptions about the level of contents insurance you need, for example. I think when I did one just before Christmas as part of some design work that I was doing, it suggested that for my 2-bedroom family home, which is filled with some beautiful antiques, because I'm very old-fashioned like that, it was suggesting that for my 2-bedroom family home, there should be £15,000 worth of contents. My sofa cost £5,000, so that doesn't seem like £15,000 is going to go a long way. But actually, if a customer hadn't been aware of that, they may have selected that incorrectly. It might be that the customer's got a higher excess than they expected. So quite often on a comparison site or on one of the direct consumer marketplaces, you might find that there's things like compulsory excesses as well as voluntary excesses. So where customers are selecting a voluntary excess during the quote journey, they're not necessarily understanding that there's then a compulsory excess added to the top of that. And if you've got a £500 excess between compulsory and voluntary and you're trying to claim £450 for a TV, surprisingly enough, that claim's not going to go through. Typically, though, the claims that are rejected are for customers who are trying to claim for cover options that are optional that they didn't take. Accidental damage and personal possessions are not included as standard in a lot of insurance policies on the market. These can add additional premium, but they can add significant amounts of value. Typically, in a year, 32% of the claims that Paymentshield will deal with will be for accidental damage. But if customers are buying without advice and looking for the cheapest possible option, they may be missing out on some of the value that these optional add-ons can really give to them. So if we can click on, please. There's always horror stories in the press, but I just wanted to share a couple of press stories that we saw kind of in the last couple of years that have really stood out to us. This is the Jenkins family, and the Jenkins family were affected by some flooding in South Wales a couple of years ago. The flooding that happened caused around £50,000 worth of damage to their family home. But Mr. Jenkins was told by insurance policy that because he hadn't declared that his house was in 200 metres of a water source, his policy had been invalid and therefore they wouldn't get a payout. Now, Mr. Jenkins doesn't even recall being asked the question because it was an assumption that was made on the journey that he went through. but because he hadn't declared it, he was now losing out. So when a client's shopping around online, they have to accept full responsibility and liability. And this is just a small thing that can happen, that can be missed, but can have a really big impact further down the line. Then on the next slide, we've got Lisa. Now, when Lisa moved into her flat with her son, she had around £5,000 worth of contents. As with a lot of people, when they're moving into a first home, they don't have a lot of items, but over the time, over years, you collect things, you buy more, you upgrade things that you've been given by family. When there was a fire at the flat at the end of December, the value of the contents was around £12,500. But because Lisa hadn't reviewed her home insurance on a regular basis, she still only had £5,000 worth of contents insurance cover. When you take into account then that their insurance provider then put on the condition of average or the average clause, they only had £2,500 paid out. And that was a ridiculously low amount and meant that Lisa was starting from scratch again. But just goes to show that with a regular review and regular updates, Lisa could have updated her policy in line with the changes that she'd been making in the family home. So if we can click on again, please, Louise. Insurance needs advice and a quality product. All of these situations point to a necessity for advice when it comes to the home insurance. Mr. and Mrs. Jenkins, if they've been made aware of where their property was located, they could have received a payout. With Lisa, if she'd been aware of the underinsurance and the changes in her circumstances had been noted, then actually she'd have been fine as well. And all of these could simply have been prevented by a conversation with a qualified advisor. We can really help to protect clients and fight back against this epidemic of rejected claims. And it's a really important thing to consider for your business. So we're going to share some best practice now. So if we can click on 2 for me. So we've got the tractor, thank you. When you're laying, back one, so there we go. It's really important that you look at what your business processes are, particularly now with the changes with Consumer Duty. Talk to every single customer about GI, whether they are buying a house, whether they're going through a remo or a PT, whether you are just reviewing their protection. Talk to every single customer about it, make it part of your process. This can help you to create other opportunities and actually to get referrals. There are a few advisors that I'm working with at the moment who are doing that review service, who are actually getting their clients referring new business to them with other friends and family that are looking for those reviews. So it's a really good opportunity. Make sure you have examples of claims. And if you're struggling with those, let us know because we can give you some stats that might help. You have a duty of care with every customer to make sure that you are helping them to avoid foreseeable harm. Now, one of the big things, if we can go on to the next slide, please. One of the big reasons why some advisors don't really talk about GI is that they don't have the confidence that they know the products for GI as well as they might do for Life and Kick, for example. You actually have a de facto comparison tool built into your Paymentshield Advisor Hub, which will allow you in 3 clicks to directly compare the Paymentshield product against any other product on the marketplace. So if it's your product knowledge that you're not confident with, we can support you, but this tool can really, really help. And it can help you to clearly and simply show the customer the difference between your Paymentshield product and another product that's on the market that might have caught their eye. And it does this with green ticks and red crosses. If you haven't seen this or used this yet, pop onto the Advisor Hub today and take a look. Compare the Paymentshield product against the last product that you saw advertised on the TV, for example. See how it compares. Check the green crosses. You can check the green ticks and the red crosses. But you'll also find, you should be able to see on the screen in the top right-hand corner, you've got like a print button. Once you've done this, you can produce this as a PDF. So if you're having a conversation with the customer and they still choose to go online, produce the PDF, pop it in the file to show that you've had the conversation about the differences between the cheap price and the value for money. And that can really, really help you to support yourselves and also support your documentation post-Consumer Duty as well. So if we can click on, please, Louise. When it comes to doing your advice for home insurance, get it into the conversation as early as possible. Set your customers' expectations. We're going to be talking about your mortgage or remortgage or product transfer. we're going to be talking about your life insurance, your critical illness, but we're also going to be talking about your home insurance as well, because this is a requirement. By making sure that it's always part of the conversation and you're always signposting it, the customer's not going to be surprised when you start giving them quotes and recommendations around this. There's a quick quote process on the Paymentshield system, but in all honesty, our brand new optimized quote journey, where you've got a lot less questions to answer and a lot of it will self-populate for you, it's now quicker than ever to just do a quote for the customer, just to start the ball rolling and start the conversation. And if you haven't had a chance to have a look at the new quote journey, again, take a look at it and see how that's going to work for you as a business, because it's a great opportunity for you to start kind of adding that service in. If we can click on, please. Confidence is key. If you don't feel like you know the proposition inside out, take some time to do your homework. We have got a fantastic GI training academy that's built into the Advisor Hub, and it's all CPD accredited. So if you want to brush up on some of your knowledge points, it can be a really, really good way to do it, and also get your CPD in as well. So make sure, if it's product knowledge that's stopping you, take some time, find out more about the product. Even if you can just learn 3 or 4 things about the product that will help you to have the conversation about why it's important, that will help you, I promise. But just to give you some key points on the proposition, if we can go to the next slide. Paymentshield have got a suite of quality products, but with common policy wording. So whilst you might get quotes from 4 or 5 different insurers, you're only going to need to learn 1 different product inside out. So it's a lot easier than some of the other providers. We've got the ease of sale. So your Paymentshield Advisor Hub does a lot of the work for you. It produces your documentation. It can send the quotes, recommendations, the terms and conditions, and the IPIDs over to the customer. You can track your quote journey. You can track your renewals and cancellations as well. And we've also got one of the biggest sales teams in the market. So you've got dedicated sales and support from myself, from the regional sales managers who are out on the road, the telephone business development managers who are all based at, well, I say in the office, at home now. But on top of that, you've also got our broker support team, and we've now also introduced chatbots as well. So you've got a lot of ways to access support to grow your business with us. So we can skip on, please, Louise. Just a couple of key points that are worth noting. With Paymentshield, there's no hidden compulsory excesses. So the excess that you select on the system is the excess that is paid, with the exception of escape of water and landslip, subsidence and heave, which industry standard there's a fixed excess for. We don't have any midterm adjustment fees, and there's no cancellation fees. So if you are speaking to a client that's with Paymentshield midterm and you know that they need to make changes to their policy, there is no charge to update their policy or to cancel their old policy and put the new policy in place that's more fit for purpose. We do 2 years no claims discount for first time buyers. I know there's not a lot of those out there at the moment, but there is still a 2-year no claim discount for them. So it's a great way for you to win that business. And all of our credit is managed in-house. So there's going to be no third-party credit providers getting in touch with customers who want to pay with a direct debit. Everything is dealt with by Paymentshield, which means that there's a lot less confusion for your customer. If we can click on, please. I think, yeah, thank you. So just have a little bit more of an overview. So at the moment, the Paymentshield Buildings Insurance is a standard rebuild value of up to 500,000 on the standard cover, or up to £1 million on our plus option. We have alternative accommodation as standard, which basically means that if there is an insured incident that means that the customer can't live at the property, we will pay for them to live somewhere else. It's up to 20% of your building sum insured. So even on a basic policy, you're going to get up to £100,000, which is a massive, massive lifeline when you're finding you are in a position that you can't live at home. This is a really big selling point for anybody with a family, anybody with pets, because we will also pay to rehome the pets. We've rehomed horses in the past, but also first-time buyers. It stops them having to move back in with mum and dad if the worst happens. Your trace and access is up to £5,000. So if we have to make some holes to find a leak and gain access to it, we'll cover the repair of those holes up to £5,000. And we also include your accidental breakage for fixed glass, ceramic hobs and sanitary ware. So your bathroom suite is covered as standard, as are your windows, etc. We can click on. Then you've got your contents insurance. So again, we've got the 2 cover levels. You've got £50,000, or you can increase it to 75 if it's needed. We cover theft from a garage or outbuilding at up to £3,000 and contents in the open ground up to £1,000. I'm picking those two purely because despite what the weatherman is saying and what I'm seeing looking out of my window, we are in the summer and there are customers that are considering things like purchasing garden furniture, new barbecues, etc. So they could be quite big selling points at the moment. We do also cover an increase in sum insured in the month before and the month after birthday, wedding, civil ceremony or a religious festival. So in the month leading up to Christmas and the month after, you will automatically get an extra 10% of cover to cover things like gifts, decorations, food and drink, etc. that might be in the house for the celebration. So if we can click on. I'm very, very conscious that that is a limited information about product, and I could sit and talk about the product all day. But I'm conscious that that is a lot to take in. But just a couple of tips from our business development managers, and you'll see in the bottom right-hand corner, there is a phone number there. I'll explain what that phone number is, but you might want to take a note of that before the slide changes. Talk about GI when you're setting your agenda for the meeting. A fully protected mortgage isn't just about life and critical illness, it's about making sure the bricks and mortar are protected as well. Don't assume that your customer knows what you offer, but always assume that you'll give them a quote. Always put forward a recommendation, not just a product. So I try to avoid the word quote. If you actually give, the customer can go online and get themselves a quote for home insurance. What they can't do is get an advised recommendation. So if you can give them a recommendation for a product, it can give it a bit more gravitas. Do that with every opportunity that you've got. And if the customer's not ready, because one of the things we find, especially when you've got a lot of remo customers, the remortgage date and the renewal date for the home insurance are out of sync. Don't let that put you off. Paymentshield's quotes are actually valid for 180 days, so you can quote it at the same time, lock in today's price because prices are changing. Lock in today's price, safe in the knowledge that actually you've got 6 months for that renewal date to come up. Use a diary system maybe. So if you've got a lot of customers where they're maybe not ready to get that quote, diarise it and call them 4 to 6 weeks before. Don't wait until the week before their renewal date, because by that point, it's probably too late. What you want is for them to be thinking about you the minute their renewal documents hit the doormat. Renewal documents will normally hit 3 to 4 weeks before. So if you call them 4 to 6 weeks before, start the conversation, get the appointment booked in, it will help you to do that. You can actually use data capture forms. So on the Paymentshield Advisor Hub, you've got a marketing toolkit. And as part of our marketing toolkit, we actually have Word documents that are data capture forms showing all of the questions that are asked on the quote system. So when you're asking your customer to start preparing their bank statements, pay slips, etc., maybe include that in the pack that you send over so they can be prepped and ready with all the information that you'll need. But most importantly, remember your buildings insurance is compulsory with every mortgage. So even if the customer is coming to you for a remortgage or a PT, ask to see a copy of their documents to make sure they have it in place. If they can't find their documents, how are they going to find their documents if they need to make a claim? So actually, that's a really good opportunity to offer that review visit. You can also check on the bank statement to make sure they've got it. But it's estimated around 25% of homes in the UK currently have no home insurance. So don't just assume that because they're coming to you for the remortgage that they have it in place. And then finally, the top tip, that phone number. So that phone number there takes you directly through to our telephone business development managers. You will all have a dedicated telephone business development manager, but if you don't know who that is, phone the direct number there. Any of the team will be happy to help you, whether it's to talk through processes, look at different opportunities, and look at kind of ways that we can support you to grow your business and to kind of support more customers on this one. If you haven't already considered it, a GI specialist is a really great addition to a business as well. But that phone number, make a note of it. Anything you want to pick up on after today's session, or if you suddenly have if you're anything like me and you think of something at 3 o'clock in the morning, you can give our team a call. They don't work at 3 o'clock in the morning before you think that, but you can give the team a call the following morning when you wake up, and they'll be able to kind of walk you through it and support you with that. That is probably the biggest tip I'll give you today, is use the team, make the most of it. So that brings me to the end of the presentation. I think the next slide is just a thank you slide. So thank you very much. So I'm guessing at this point that we open the floor for questions, Louise.
Absolutely. Thank you, Jenny. That was really informative. And I think, you touched on a few points that we do hear quite a lot on our broker support team and also with the sales team. It's just having that confidence that brokers, times I think critical at the moment, but also especially if they've got a dedicated GI advisor, having that confidence and understanding of when they're quoting of what they need to do. So yeah, if anybody has got any questions, I can't see any at the moment in the chat, but if you want to pop them in, we can go through those. And also just a reminder, Jenny's team are great. They want to support, use them. If you haven't been onto their website and looked at all the different tools, it's brilliant. They've covered so many different areas. And we've also got the GI Resource Centre on the TMA website, which Jenny and the team have been really proactive in supporting us with documents and details on there. So have a look on there as well. If you've not yet actually signed up to anything with GI, speak to our broker support team. They can talk you through the process and make sure that if you've got no agencies with Paymentshield, we can set those up for you. And Jenny's alluded to, there's a few different options of how you can quote GI. So, speak to us if you want to just go through that. Our broker support team are there, but Jenny's team are fantastic. So please utilise their support and services to build it into your journey. So so thank you. So I think we're all okay, Jenny. I think you've gone through so much. The brokers are all happy, and we have recorded this session. So if there's any of your brokers or colleagues that haven't been able to join on this session, we've recorded it and we'll be uploading it to TMA Vision. So if you want to look at it in the future or send it to a colleague, if you've if it's been beneficial for you today, please put those details in. So yes, I'll just give you one last opportunity. If anybody wants to put a question into the chat box, the details will be shared after the session of Jenny and the team, so we'll make sure that you've got those and you'll be getting your CPD certificates as well. So I think we're all okay. There's no questions that have come in. So yeah, final thank you, Jenny. Appreciate everything that you've got on there. I think it's been really useful. And again, if anybody on the call has got anything post-event, please just give the broker team a call or Jenny's team directly. They'd be more than happy to support.
Thanks very much, guys.
Good. Enjoy the rest of your day. Thank you.
Bye.